Our next topic is on preferred stock. This stock has special rights that give it priority over common stock. Companies issue preferred stock to raise money without giving up control of the corporation and to boost the return earned by common stockholders on corporate assets. This is also called financial leverage. It usually has a par value, but it's usually sold different from the par value, just like common stock. The dividend rate is usually stated, whereas with common stock, the dividend yield fluctuates each quarter depending on the company earnings. To determine the dividend amount, you need to multiply the dividend rate by the par value by the number of shares. Preferred stock usually does not have voting rights. However, preferred stock has a priority over common stock in receiving dividends and in liquidation of assets. I inputted a table here that outlines the differences between common and preferred stock. When issuing preferred stock, there is a separate capital account used to record preferred stock. We call it preferred stock instead of common stock. This account is used to record the par value of shares issued, just like with common stock. The paid-in capital account is used to record any value received above the par value. Basically, when journalizing, the steps are the same as with common stock, we just change the name. Preferred stockholders are allocated their dividends before any dividends are allocated to common stockholders. Preferred stock can be cumulative or non-cumulative. Cumulative preferred shareholders have a right to be paid both the current year and all prior periods of unpaid dividends before any dividend is paid to common stockholders. These unpaid dividends are referred to as dividends in arrears. Most preferred stock carries a cumulative dividend right. For example, if last year the company had a net loss, they could not pay out the dividends. If this year they made money, then the preferred shareholders will be paid the dividends for this year and for last year if it's cumulative. Non-cumulative preferred stock does not have rights to prior periods of unpaid dividends. This means that if the company could not pay me dividends one year, I won't ever get that back in a future year. Preferred stock can also be participating or non-participating, but we are not going to cover that in this course. We're going to do a few practice problems involving preferred stock. This is number 5 on your classwork. Prepare the journal entry to record Yellow Co's issuance of 5,000 shares of $100 par value, 7% cumulative preferred stock for $102 cash per share. For this part, we just want to journalize the issuance of the preferred stock. Remember, it's the same steps as with common stock. Do you remember what the first step is? It's to input cash for the amount that the company is receiving from selling the shares. How much is the company receiving? They are selling 5,000 shares for a price of $102 each. Multiply 5,000 by 102 to arrive at $510,000. Next, you want to record the stock account for the amount of the par value. We don't call it common stock anymore. What do we call it now? It would be preferred stock. Remember to read the problems carefully so you don't mix them up. What would the amount be? You would multiply the 5,000 shares by the par value of $100 per share. You would get $500,000. The last step is to find the difference and credit it to the paid-in capital account. The difference between $510,000 and $500,000 is $10,000. If Yellow Co. declares a year-end cash dividend, what is the amount of dividend paid to preferred shareholders? This second part of the problem wants us to calculate what the dividend amount would be that the company has to pay out each year. This chart helps us determine that amount. First, input the par value per share. It would be $100 per share, which is listed in the first part of the problem. Next, what is the dividend rate? It is 7%. To find the dividend per share, you would multiply the par value by the dividend rate. When you multiply $100 by 7%, you get $7. Next, input the number of shares. This would be 5,000 shares. The last step is to determine the total amount of dividends paid out. You would multiply the dividend per share by the number of shares. $7 times 5,000 shares. You would get $35,000. In total, Yellowco needs to pay out $35,000 in dividends to its preferred shareholders. Let's continue practicing preferred dividends. This time we will go a little further. This is problem number 6. Brown's outstanding stock consists of 80,000 shares of cumulative 7.5% preferred stock with a $5 par value, and also 200,000 shares of common stock with a $1 par value. Determine the amount of dividends paid each year to each of the two classes of stockholders. During its first 4 years of operation, the corporation declared and paid the following total cash dividends. In 2015, it's 20,000, 2016, it's 28,000, 2017, it's 200,000, and in 2018, it's 350,000. Okay, so you can see that there's a lot of information in this big scary chart. However, this problem is not as complicated as it looks. What we are going to do first is determine what the company should pay out in dividends. Then we're going to look at how much they actually can pay out and allocate that amount between the preferred and common shareholders. Since this stock is cumulative, if the company shorts the preferred shareholders 1 year, they can make it up in future years. Let's begin by determining how much they are supposed to pay out each year, just like we did in the last example. What is the par value per share? It is $5. Remember to use the preferred stock information, not the common stock. Next, input the dividend rate. It is 7.5%. Now we multiply the $5 by the 7.5% to get the dividend per share amount. You should have gotten a really small number of 0.375. Next, input the number of shares, which is 80,000. Lastly, calculate the total amount paid as dividends to preferred shareholders by multiplying the number of shares by the dividend per share. You should have gotten $30,000. This means that we are supposed to pay out preferred stockholders a total of $30,000 in dividends per year. All the rest of the money will be given to common shareholders. The small chart on the top right corner shows how much we can pay out in dividends. The first year is 2015. We have enough money to pay out $20,000 in dividends. This also goes into the first box in the first column. The column total cash dividend paid is the total amount we can pay. We put the $20,000 in the first box because that is how much we have. We can't pay out more than we have. The next box is how much of that $20,000 will go to preferred shareholders. How much are preferred shareholders supposed to get? They're supposed to get $30,000 per year that we calculated in the top part. Do we have that? No, we don't. We can only give them what we have. Therefore, we will give them all $20,000. Unfortunately, there is nothing left to give to common shareholders. They won't get anything. Are we in arrears though? Meaning, did we shortchange the preferred shareholders? Yes, we did. We were supposed to give them $30,000, but we only gave them $20,000. So, what are our dividends in arrears? We are short $10,000. Since it is cumulative, we can pay this back in later years if we earn enough. Let's look at 2016 now. How much can we pay out in dividends? Looking at the chart on the right-hand top corner, we see that we have $28,000 to pay out in 2016. We put this in the first column, just like with 2015. How much are we supposed to give preferred shareholders? $30,000, right? Do we have that? No, again, we can only give them what we have. We will give them the full 28,000. Will anything go to common shareholders? Once again, no. Are we still in arrears? Yes. We are actually even further behind. We owed them 10,000 from 2015. How much do we owe them from 2016? It's another $2,000. The total is $12,000. I have some students who get confused here and want to just put in the $2,000. However, it's the total amount that we are behind as of that year. We are $12,000 total behind. 10,000 from one year, 2,000 from the next year. Okay, let's look at 2017. How much can we give out in dividends in 2017? Looking at the chart in the right-hand corner, we can give out $200,000 in 2017. That goes in the first column. How much of that will go to preferred shareholders? This is where it changes a little. How much are we supposed to pay them each year? $30,000, correct? Do we have that? Yes, we do. Also, since it's cumulative, we are supposed to pay them from previous years. Do we have enough to pay them the dividends in arrears of $12,000? Yes, we can. We will actually give them $42,000 in 2017. This is a standard $30,000 plus the $12,000 we were behind. How much will go to common shareholders? It will be anything that is left over. You just need to subtract 42,000 from 200,000. You get $158,000. There is nothing in arrears. We are all caught up. We move on to the next year. How much in dividends can we give out in 2018? $350,000. How much will go to preferred shareholders? We owe them $30,000 each year. Are we in arrears? No, we are not. Therefore, we only need to give them the $30,000. How much will go to common shareholders? Remember, it would be the rest of it. Subtract 30,000 from 350,000. Subtract 30,000 from 350,000. It would be 320,000. The last thing to do is total the first three columns. Total cash dividends paid are 598,000. 120,000 went to preferred shareholders and 478,000 went to common shareholders. If this was non-cumulative preferred stock, then we wouldn't need to worry about the dividend in arrears column. You wouldn't pay them back from prior years.